Ever wondered how a $29 million development might impact a university neighborhood? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In recent news, Uptown Rental Properties, in collaboration with North American Properties, has unveiled The Point, a $29 million mixed-use apartment community. This new development is strategically designed to serve the student population at the University of Cincinnati. As reported by Brian Planout from the Cincinnati Business Courier, The Point is a 190-bed facility that marks the beginning of a series of new projects planned for the Uptown area. This project is part of a broader trend of mixed-use developments, which are increasingly popular in university towns across both Canada and the United States. Such developments cater to the needs of students by providing convenient housing options that often include retail and other amenities, creating a vibrant community atmosphere. Looking at a Canadian perspective, cities like Kitchener, Waterloo, and Cambridge in Ontario are also witnessing a surge in similar developments. These projects are not only transforming the landscape, but are also attracting significant investment, reflecting a healthy demand for multifamily properties in these regions. The appeal of these projects goes beyond just the student demographic. They are designed to integrate seamlessly into the community, offering retail spaces and other commercial opportunities that can benefit from the foot traffic generated by the student population. This model is proving successful both in Canada and the United States, highlighting its cross-border relevance. In the realm of commercial real estate, a significant legal battle is unfolding in Chicago's South Loop. The owner of two adjacent hotels, the Hilton Garden Inn and Homewood Suites, is embroiled in a foreclosure lawsuit amounting to $188 million. This legal action underscores the ongoing challenges facing the hospitality sector in the wake of the COVID-19 pandemic. According to a report by Danny Ecker from Crain's Chicago Business, the lawsuit represents the financial distress that has persisted in the hotel industry, particularly in urban areas where tourism and business travel have yet to fully rebound. The South Loop case is a stark reminder of the pandemic's long-lasting impact on property values and the financial health of hospitality ventures. While the situation in Chicago highlights the struggles in the American hospitality market, similar trends can be observed in Canada. Cities like Kitchener, Waterloo, and Cambridge in Ontario are experiencing shifts in their commercial real estate landscapes, but with a focus on multifamily developments and tenant leasing rather than hospitality. These Canadian cities are seeing increased investment in mixed-use projects that cater to various community needs. The cross-border relevance of these developments is evident as both Canadian and American markets navigate the post-pandemic recovery. In Canada, the emphasis on multifamily properties and tenant leasing is drawing substantial interest, contrasting with the challenges faced by the hospitality sector in the United States. This divergence highlights the varied recovery paths and investment opportunities present in the North American commercial real estate scene. In the latest commercial real estate news, a significant property transfer has occurred on Polaris Parkway in Columbus, Ohio. According to a report by the Columbus Dispatch, a retail space at 1025 Polaris Parkway was sold for over $11 million. The transaction involves FB Polaris LLC, selling the property to Polaris Commons BGOG LLC, with the sale finalized on July 29, 2025. This transfer highlights the robust activity within the retail sector in Ohio, particularly in the Columbus area, which is known for its thriving commercial real estate market. The sale of this retail space at Polaris Parkway represents a continued interest in well-located commercial properties that offer substantial foot traffic and visibility. Such investments are attractive to buyers looking to capitalize on the area's economic growth and consumer demand. As the retail landscape evolves, properties like this one are proving to be valuable assets for investors seeking stable returns. While Polaris Parkway's retail space garners attention in the United States, similar trends can be observed in Canada's commercial real estate market. In Ontario, cities such as Kitchener, Waterloo, and Cambridge are witnessing increased interest in retail developments driven by a growing population and a strong local economy. These regions are experiencing a surge in retail and mixed-use projects, reflecting a healthy demand for commercial spaces that cater to diverse community needs. The cross-border relevance of these developments is evident as both Canadian and American markets continue to attract substantial investments in their retail sectors. The parallels between the Columbus area and Ontario's cities highlight the shared opportunities and challenges within the North American commercial real estate landscape. As investors seek to diversify their portfolios, the appeal of retail properties remains strong, underscoring their importance in the broader real estate market. In recent developments, the West Roseville area is witnessing significant activity with the Baseline Marketplace project. According to a report by Jake Abbott from the Sacramento Business Journal, a newly submitted site plan suggests that Home Depot and Target might be joining Costco as anchor tenants in this emerging shopping center. This potential addition of major retailers like Home Depot and Target could significantly enhance the retail landscape of West Roseville, attracting more shoppers and boosting local economic activity. The presence of these big-box retailers often serves as a catalyst for further commercial development in the surrounding areas. The Baseline Marketplace project is a part of a broader trend of retail development in the West Roseville region, which continues to see growth and investment. The inclusion of well-known retailers is likely to increase foot traffic and spur additional business opportunities, making it a desirable location for other retail and commercial ventures. Such developments in the United States have parallels in Canada, particularly in regions like Kitchener, Waterloo, and Cambridge in Ontario. These areas are also experiencing a surge in retail and mixed-use projects, driven by a growing population and a strong local economy. The cross-border relevance of these developments highlights shared opportunities and challenges within the North American commercial real estate landscape. In a recent transaction that underscores the dynamic nature of the retail sector in North America, a Raleigh-based real estate firm has acquired a portfolio of retail centers anchored by Food Lion. This acquisition includes two notable properties located in the Triad region, as reported by Elizabeth Lilly Egan from the Triad Business Journal. The purchase of these retail centers reflects a strategic move by the firm to strengthen its presence in key markets that offer stable consumer demand and growth potential. Food Lion, known for its strong brand presence, serves as a significant draw for foot traffic, making these centers attractive investments. This acquisition is part of a broader trend where investors are increasingly focusing on properties anchored by reliable tenants, such as grocery stores, which have proven resilient even during economic downturns. The stability offered by these tenants ensures a steady stream of income, appealing to investors seeking long-term returns. In Canada, similar investment strategies are being observed in regions like Kitchener, Waterloo, and Cambridge in Ontario, where retail centers anchored by strong tenants are garnering attention. The demand for such properties continues to grow, driven by a robust local economy and population growth. The cross-border relevance of these investment trends underscores the shared opportunities within the North American commercial real estate market. As both Canadian and American investors seek stability and growth, properties with reliable anchor tenants like Food Lion are seen as valuable assets. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.